China's economy has long been a subject of global fascination, and in recent years, its resilience in the face of adversity has taken center stage. Despite a protracted trade war with the United States, marked by tariffs and technological restrictions, China's economic engine continues to hum. This resilience is a testament to the country's multifaceted economic strategy, which prioritizes domestic consumption, attracts foreign investment, and fosters innovation. The trade war undoubtedly presented challenges. Tariffs impacted certain sectors, and supply chains were disrupted. However, China's policymakers responded with a combination of pragmatism and long-term vision. This approach has mitigated the worst effects of the trade war and positioned China for continued growth. China's vast domestic market provides a buffer against external shocks. Its burgeoning middle class with a voracious appetite for goods and services is a key driver of economic growth. Moreover, China has strategically diversified its trading partners, reducing its reliance on any single country. This multi-pronged approach has allowed China to weather the storm of the trade war and emerge as a pillar of stability in an uncertain global economy. Its experience offers valuable lessons for other nations navigating the complexities of international trade and geopolitical tensions. One of China's most significant economic strengths lies in its enormous and rapidly growing consumer market. Recognizing the importance of domestic demand, the Chinese government has implemented policies to unleash the spending power of its citizens. These initiatives aim to boost consumption, reduce reliance on exports, and create a more balanced and sustainable economic model. One strategy involves promoting consumer financing and increasing access to credit. By making it easier for consumers to borrow money, the government aims to stimulate spending on big-ticket items like cars and appliances. Additionally, China has been encouraging the use of credit cards, which are not as widespread as in other developed economies. Furthermore, the government has introduced policies to boost disposable income. These include tax cuts for middle-income earners and increased social welfare spending. By putting more money in people's pockets, China aims to encourage spending and drive economic growth. These efforts to bolster domestic demand are already yielding results. Consumption is playing an increasingly important role in China's economic growth story. As the government continues to implement these policies, domestic consumption is expected to become an even more significant driver of the Chinese economy in the years to come. As trade tensions between the United States and China escalated, global investors began to view Chinese equities as a potential safe haven. This shift in sentiment was driven by a number of factors, including China's economic resilience, its vast domestic market, and its government's proactive approach to managing the economy. The performance of the Hang Seng Index, a key indicator of the Hong Kong stock market, reflects this trend. Despite global market volatility, the Hang Seng Index has demonstrated remarkable stability, suggesting that investors remain confident in the long-term prospects of the Chinese economy. Several factors contribute to the attractiveness of Chinese equities. China's technological innovation is a major draw, with companies like Alibaba and Tencent becoming global giants. Additionally, China's infrastructure development and urbanization continue to create investment opportunities in sectors like construction, transportation, and energy. While global investors remain cautious about the ongoing trade tensions, many view China's economic fundamentals as strong. The government's commitment to opening up its financial markets and providing a level playing field for foreign investors further enhances China's appeal as an investment destination. China's automotive industry, a pillar of its manufacturing sector, faced significant challenges amid the trade war and the global economic slowdown. Tariffs on imported vehicles and components, coupled with local competition, created a perfect storm for Chinese automakers. However, the industry is showing signs of recovery, driven by government support and a shift towards electric vehicles. The Chinese government implemented a range of measures to support the automotive sector. These included tax breaks for car buyers, subsidies for electric vehicle manufacturers, and investments in research and development. These initiatives aimed to stimulate demand, promote innovation, and enhance the competitiveness of Chinese automakers. Moreover, China's push for electric vehicles is reshaping the industry. The government has set ambitious targets for electric vehicle adoption, and Chinese automakers are investing heavily in electric vehicle technology. This transition presents both challenges and opportunities, as companies adapt to the evolving market landscape. While the road to full recovery remains long, China's automotive industry is demonstrating resilience. The combination of government support, technological innovation, and a growing domestic market provides grounds for cautious optimism about the future of this vital sector. Central to China's economic resilience is its government's commitment to fiscal prudence. Unlike many developed economies, China has maintained a more measured approach, prioritizing long-term stability. This strategy has allowed China to maintain a healthy debt-to-GDP ratio and avoid excessive borrowing. China's central bank carefully manages interest rates and reserve requirements. This influences the flow of credit and investment, preventing asset bubbles and excessive speculation. Issuing long-term bonds finances infrastructure projects, locking in low interest rates and spreading costs, investing in its future for a sustainable economy, earning confidence from international investors and rating agencies. China's prudent approach positions it well for continued growth and stability. Investing in the future. Infrastructure and innovation. China's economic strategy extends beyond short-term measures. Significant investments in infrastructure and innovation secure long-term prosperity. These projects create jobs, boost productivity, and transform China into a global tech leader. China's infrastructure development is remarkable. Thousands of miles of high-speed rail, modern airports, and state-of-the-art ports, facilitating trade, creating jobs, and stimulating economic activity. Heavy investments in research and development, focus on AI, robotics, and renewable energy. Incentives for businesses to innovate. World-class research institutions attract top talent. Investments in infrastructure and innovation are paying off. China leads in 5G, electric vehicles, and e-commerce, transforming industries worldwide. By investing in its future, China aims to move up the value chain and become a global innovation powerhouse, laying the foundation for decades of growth and leadership. The challenges of success, income inequality, and environmental concerns. While China's economic rise has been nothing short of remarkable, it has also brought about its own set of challenges. Income inequality has widened, and environmental degradation has become a pressing concern. Addressing these issues is crucial for ensuring the sustainability and inclusivity of China's economic growth. The gap between the rich and the poor has been widening in recent years. While urban areas have prospered, rural communities have lagged behind. The government is aware of this issue and is implementing policies aimed at reducing income inequality, such as increasing the minimum wage, expanding social safety nets, and investing in rural development. Environmental degradation is another pressing concern. China's rapid industrialization has taken a toll on its air and water quality. The government has acknowledged the severity of the problem and has implemented stringent environmental regulations and invested in renewable energy to transition away from fossil fuels. Addressing these challenges is not only a matter of social responsibility, but also an economic imperative. Failure to address income inequality could lead to social unrest and undermine economic growth. Similarly, environmental degradation poses risks to public health and long-term economic prosperity. The U.S.-China trade relationship, a new paradigm. The trade war between the United States and China marked a turning point in the global economic order. It signaled a shift away from the era of globalization and towards a more fragmented and uncertain trading environment. While the two countries have reached a truce, the underlying tensions and competition remain. The trade war highlighted the deep interdependence between the U.S. and Chinese economies. Tariffs and restrictions disrupted supply chains and impacted businesses on both sides of the Pacific. It also exposed the vulnerabilities of relying too heavily on a single trading partner. In the wake of the trade war, both countries are seeking to diversify their trading partners and reduce their reliance on each other. This trend towards decoupling is likely to continue, leading to a more regionalized global economy. The U.S.-China trade relationship is likely to remain complex and fraught with challenges in the years to come. Competition in areas like technology and innovation will likely intensify. Both countries will need to find ways to manage their differences and cooperate on shared challenges like climate change and global health. China's economic trajectory, a force to be reckoned with. Despite the challenges it faces, China's economy remains a force to be reckoned with. Its vast domestic market, its commitment to innovation, and its strategic investments in infrastructure position it for continued growth and influence on the global stage. China's economic model, once dismissed by some as unsustainable, has proven to be remarkably resilient. Its ability to weather external shocks like the trade war has earned the respect of investors and policymakers worldwide. While China's economic ascent is not without its critics, its impact on the global economy is undeniable. Its growing middle class, its technological advancements, and its infrastructure development are transforming industries and creating opportunities around the world. As China continues its economic transformation, it will undoubtedly face new challenges and uncertainties. However, its history of resilience, its long-term vision, and its adaptable approach to economic management suggest that it is well equipped to navigate the complexities of the 21st century global economy.